Hello, welcome back. Thank you so much for joining me today for general journal entries. So we've covered that every single transaction has two sides, and I've told you that anything and everything that happens in a business goes through our general ledger. There's no exception to that. Everything will go through this general ledger. Now, things happen in a business that don't always go through the banking or credit card process. So when we have something that happens in the business that doesn't, we need to get it on the books, and to do so we use a general journal entry. So before we get started, let me go over a few changes that I've made to the balance sheet. We've added a few sections. In the assets section, I've added current assets and fixed assets. And in the liabilities section, I've added current liabilities and long-term liabilities. So current assets are, it's usually cash or anything that can be turned into cash fairly quickly. Things up in this section will turn over quickly. The cash, accounts receivable, employee loans, things like that. In the fixed assets section, well, it's pretty self-explanatory. They're fixed assets. Their balance isn't going to change on a regular basis. We're going to add to them or maybe take things away if something's retired or sold, but they're normally going to last more than a year, and they are pretty valuable. So let me go ahead and tell you, if you purchase something, a small tool or a small piece of equipment that's considered consumable and not going to last you a year, you put that in an expense account on the income statement, okay? On the balance sheet, we only put things here of value that's going to last you more than a year. Okay, then in our liabilities section, our current liabilities, here we put everything that's going to be repaid within the next 12 months. In the long-term liability section, here we put everything that's going to take more than 12 months to pay for. Okay, so that covers our new sections. I've added 3 new accounts. Of course, one is a building, one is equipment, and then the other is notes payable equipment. We're going to add a building and a piece of equipment today. All right, so the first transaction is the building. Jack said that he purchased a building before he opened the business. He had it on a piece of property next to his house, and he was using it as a garage. Well, now he's decided, of course, to open his own business, and he's going to use that building 100% for business. So we need to get it on the books. So we do that with a general journal entry. And here is your first one. So it's number 1, and we use today's date for the date, 9/22/16. Our first account is building. That's going to, of course, be a debit because it's in the asset section for $26,000. The credit will go to owner's contribution, $26,000, because he paid for it before he opened the business with his own personal funds. Okay, then we use our description there to record building placed in service 9/15/2016. All right, great. Now we take that information, and the reason that we use this is because sometimes these journal entries can take up a full page. And this is how we can check it, make sure all of our debits equal all of our credits before we transfer it over to the general ledger, because if we didn't have this, we put everything in the general ledger and we made a mistake, it would take forever to find that mistake. So that's why we use a general journal entry rather than just taking everything directly to the general ledger. There is our general ledger entry where we recorded the building purchase, $26,000, the date, the general journal entry number 1 is there. And here is the account for owner's contributions. There's a $26,000 entry there as a credit, of course. And then remember, if we want to increase the credit number, we do the opposite that we would do above the water, and we would subtract. So a credit of $10,000 minus $26,000 equals a credit of $36,000. Okay. So now our next transaction, Jack went to the local equipment company and he purchased a table saw for $18,000. He didn't put any cash down, he financed it 100%, and he financed it for 3 years. So since it's going to take 3 years to pay for, it's going in the long-term liability section. Okay, so now we go to our general journal entry book. Here is number 2. Our first line is equipment. We want $18,000 to show up in our equipment account in the fixed assets section of the balance sheet. $18,000. The other side of the entry is a credit to notes payable equipment. Then our description there is to record table saw purchased on 9/20/2016. Then we take that information, carry it over to our general ledger. There is that for you for the equipment, and then there it is for the note payable equipment account. And then we take all of our balances in the general ledger and take it to the trial balance, and then from the trial balance we take it over to our balance sheet, our balance sheet and income statement. So I'm going to skip the trial balance process and we're going to go straight to the balance sheet. So in the building account, we have $26,000 in the general ledger now. That comes over here. In the equipment account, we have $18,000 for a total fixed assets of $44,000. So our total current assets and our total fixed assets equal our total assets of $54,300. And these are all debits. All right, then we come over to our liabilities and equity section and we record our notes payable equipment here, $18,000. I'm only recording the things that changed. Our cash didn't change. Our credit card payable didn't change. So now our total long-term liabilities are $18,000. Our total liabilities are the current liabilities plus the long-term. Now that total liabilities are $18,100. Then the next thing that changed is our owner's contribution went from $10,000 to $36,000. So that goes here. So our total equity is now $36,200. And our total liabilities and equity are $18,100 plus $36,200 equals $54,300. Total credits, these are all credits. So our total credits equal our total debits, $54,300 and $54,300. So our total assets of $54,300 minus the liabilities that we owe of $18,100 equals our total equity. This is what we would have left over if we sold everything, closed the bank account, paid off all the bills. We would have $36,300 left over. So that takes care of general journal entries. Thank you so much for being here with me today. I look forward to the next time. Please share my videos and subscribe to the YouTube channel. Thank you.